Hey guys, what's up? Welcome back to RoyalBluFX. Today we're going to talk about trends, specifically about trends because this has been a topic, a very controversial topic in the YouTube community about how to identify trends specifically. And the majority of the time you'll see, a lot of YouTube videos probably saying, in order to draw trend lines or to identify a trend, you must need a trend line like this, right? But what's really controversial about having a trend line is that, a lot of people don't know how to draw a trend line or may have a few ways to draw a trend line. For example, like, making sure you connect all the higher lows. So from this point to this point, right? And then all of a sudden you have this little break like this right here that, breaks the trend line. Then from this point, you're thinking, okay, well, how do I connect the next trend line, right? Like you may think, okay, from this point to this point now. So now we have two other points that are involved in this trend line. And so you start to have this kind of mesh that happens within this market here with these trend lines. It's a mesh. It's kind of a mess, to see where the trend is and how to identify it. So in this video, I'm going to show you how to actually identify trends. I've been doing it a lot, for the last 3 years, identifying trends in the market. And I'm going to reveal you guys how the trends are done appropriately. So when I start out to identify trends, I start identifying break of structures. Break of structures really identify a trend in the market, and I'll tell you why in a second. But the reason why we identify breaks of structures breaks of structures as trend is because when the market breaks above the previous high, for example, this is a higher high. So if the market breaks above the previous high here, this tells us that the momentum in the market is strong, that the market is in fact wanting to go up, right? So it's pretty much a guarantee, or there's somewhat of a guarantee that the markets will continue going back up in our direction. So if the market breaks a structure, that obviously tells us the market needs to mitigate, and then prices will continue going higher. Prices will continue higher. So this is one solid way of identifying how the trend, how to identify a trend and where the market's going to go, right? So, but a lot of people, as I mentioned, will typically just draw trend lines like this to identify a trend of the market, and then, then what do you do after that? There's a lot of worry because when the markets break the trend line, now you're left with no trend lines. Now you're wondering, well, where's the true trend now? Price probably consolidating like this. Then you're trying to put, so now you're trying to play the support and resistance game like this. And now markets break below, then come back above. Now you're like, okay, well, where's the true trend now? I can draw another trend line like this, maybe I can draw a channel, something of that sort. It just gets so messy if you don't understand how the true trend works. Okay, so let me go back to this scenario. So say we were doing higher highs here, right? You continue doing higher highs, and all of a sudden the market breaks below, breaking below structure like this. Now you're left to wonder, where is the market going now? Is it potentially a sell because we just broke the first line of structure here? Now we're expecting lower lows, which is very typical for a lot of traders to think about or to know, that, anytime it breaks the structure, we're going to be going, now this is automatically a reversal, which in some cases is and isn't. But I'll tell you why sometimes the first break of structure does not involve a change of direction. But that's really a different topic for another video. But let me continue off with this so I can show you how this works. So when there's another break of structure like so, okay, we have what's called, for example, what's called the major swings in the market. And then inside these major swings, there's the minor swings. Okay, the minor swings go up, substructure swings go down like this, minor swings go up, and then subs go down. So in this scenario here, let's just pretend that these are the substructures going down, which means these are the minor structure. It's minor structure going up, substructure going down. When structure breaks like this automatically doesn't tell us that the trend is reversing, or that the trend is going down, or it's going to be a downtrend. It just tells us maybe it's hitting off, the market's probably tapping into a order block, and then potentially going right back up, continuing the trend. Now breaking a new high, which tells us that the market is in fact a buy, that we're looking for buys here. Markets can pull back up to another order block right here and continue the trend, right? So the way I always identify a trend is normally with a break of structure, and then I see obviously visually where the market's going. It's going upwards. There are two things with this idea of using breaks of structures. So notice how we had break of structure here, here, and here, and all of a sudden the market broke below this low here, this higher low, right? We have this the minor structures going up and the substructures going down. But if you notice in the market that there's major swings that go up and down like this all the time. Okay, so we're actually playing there's two types of factors in this trend, in the direction, because we're using the major swings and the minor swings to identify where the market is, or where the trend is at this point in time. So let me give you another example here. Let's go all the way back here into a live chart so I can show you. So right here, you can clearly see that we have major swing down, a major swing up, major swing down, and now market's doing a major swing back up, right? So if we look at just this piece of information right here, what does this tell you here? We would treat this this market here as our higher time frame, the 4 hour, which means that all we're looking for in this market is really to trade this trend, the trend in the market that's going upwards. Okay, it's doing a perfect order flow going upwards. The market's pushing up. So I'm only interested in trading this piece of information going back up, because it's giving us a perfect order flow. It's giving us perfect breaks of structure. Here's one, here's two. There's the high of this point, and there's the low of this point right here. Okay, so but I'm going to show you now how to truly identify the direction. First of all, we have we have a supply area here. Then we also have a demand area right down here. Okay, in order to identify the true trend of the market is to understand our supply and demand levels. So I also incorporate the supply and demand levels at all times. So I want to put this as a demand, D for demand, or let's just write it down, demand. And then we're going to write here for supply. Okay, so there's our supply and demand levels. Now, why do we incorporate our supply and demand levels in here? Well, it's important to know the reason as to why we should apply supply and demand is because, for these major moves here, these major moves is what we don't trade. I mean, you can trade them if you'd like. You could wait for a complete break of structure like so, wait for the market to come back up to an order block and then sell it off, right? But since I treat the 4 hours my higher time frame, I treat my big swings like supply and demand levels. And the reason why you need to know the supply and demand levels is because inside the supply and demand level, you'll see who's in charge of the market, whether it's the bears or the bulls. In this point here, you can see the bulls are in charge of the market because price is pushing, doing higher highs, right? Higher highs and higher lows. It's breaking structure like this. So now we know that in the lower time frame, we can look for entries. So if we had a break of structure, say here, like we do, like this, let's put a BOS on this. We have another BOS right here. All right, and then we can look for another BOS right here because we technically have a break of structure here. If you look out, this was the last high right here. This high here was broken by this higher high. Okay, markets came back to an order block right down here, and you could have looked for buys right there. We had another break of structure, which tells us the market should push up even higher. So we look for our last order block, right? Oops, right. Let me see. This is the pivot point, push back up, breaking structure. So in theory, this would be our last order block right here, right there. So this would be another entry right there, right? Because we had another break of structure right here. This was our last break of structure. And then we had another break of structure. And this could have been our buy from this point right here, right there. Okay, so let me just show you why, and let me just show you why this area here didn't go right back up, okay? Now, we had a complete break of structure right here. The supply chain was broken. That means on the supply chain, this was the last high that was created here. This was the last high before this high was created. So now we have a higher high, higher than this high here. Okay, so let me mark this down here for you guys to see. Right there and right here. So now that we see that this high now is higher than this, it broke the supply chain, we can definitely tell that the market should be pushing up, okay? You don't need to use a trend line like a lot of people do. And I'll show you why in a second. I'm going to play this video. I'm going to play the replay here. So watch this. Once we go, right, and say we bought here, right, watch what happens if you're using trend lines. Look what happens. The trend line breaks. Now you're confused as to knowing where the market's going, right? You don't know the direction of the market. It looks as if the market should be going down now because we're doing the lower lows here like this, you know, lower lows here. Now it looks like another lower low. It looks like you're trying to sell the market now, right? And you're probably thinking, well, you know, my order block is probably right up here, and you're trying to sell it either here or probably right here. You're going to try and sell this market. Okay, look at that. See, you might have had a little, you know, luck there in terms of making some money here for this sell, but in theory, the market was actually pushing up. It was doing higher highs because look at the multiple breaks of structures we've had here. This tells us the market should be pushing up higher. We should be looking for more buys because demand is higher here, not supply. Okay, the supply chain was broken. Therefore, it tells us that the market, there's more demand than supply in here. So now we should be looking for more buys. Okay, so that's why trend lines are a terrible idea to use as trends. Not to say that they don't work. They do work eventually. They do work for a little bit in a little period of time, and then they break. So you need to probably lose these trend lines because it definitely confuses you in terms of knowing where the market should be going. You know, if you had a trend line like this, you know, this doesn't tell you where the trend is, right? If you had a trend like this, a trend line like this, look at where the slow comes below this area here. It'll have knocked you out. Now, the only reason I do use the method of trend lines, but only to identify where liquidity is in the market. Like here's a liquidity area, here's a liquidity area. Okay, this is an area, a very attractive area for banks to come down and hit out the liquidity and then take out all this money that where all the buyers were here buying here at where trend lines are. Because, you know, we're taught how to, as traders from the very beginning, we're taught like a very general way of trading, which is create a trend line and then wait for the market to come to a trend line to buy, which is sometimes okay, but most of the time I disagree with, right? And we're also taught what double tops, you know, double bottoms. Say, for example, like right here, this is a double top. We were told to buy double tops. in the market here comes out, the liquidity takes out these sellers here for the market to continue going down, right? So it's very tricky. So I only use trend lines for liquidity bases, and that's it. For example, there's people here that were selling here, right here, and now look what the market did. It took out all the liquidity from all the sellers that were right over here. All right, guys, my cat was peeing on the floor, but I'm back now. Anyway, so in order to identify a trend, like I said, I only use these trend lines as far as liquidity, so I know where the market's going to hit the liquidity to eventually, show us the true direction of the trend. So I would show, put a dollar sign here to let me know that there's a lot of liquidity sitting here. And as you see, this swing here that pushed above took out all these sellers here. So that's why we don't use trend lines at all, period. They're the worst ways to use to identify a trend. And I know I've been repeating that over and over. So watch this now. So now that the market's going up, right, it broke a new high right here. Where do you think the market's going? Up, right? Because that's how we identify the market as the new direction, or the main direction of the market. As you see over here, we broke the supply chain, the higher swing supply chain, which guarantees us for the market to continue even higher now. We can still play the minor swings right here, these break of structures. Okay, so if we're looking for buys here, right, or maybe even here now, we're going to wait for the markets to come back to eventually mitigate, either here or here now. There's another break structure, and here there was an order block right here where the market has tapped in to push the market even higher. Okay, so we would highlight this order block right here because we had a break of structure, as you see right here, and this told us on a lower time frame. Let's go down the lower time frame so you can see. Lower time frame, we would have bought when price got to this area. Okay, now still the direction is still up. Notice again how we broke structure again. All right, we have another break of structure. This tells us we are still buying. So now what we're going to do is wait patiently for the market to come back to an order block. Okay, when we're down here, so market is coming below the order block right there. The buyers would have been triggered right here at the order block. Let's go down to the 30 minutes. So you can see we would have entered right here. As soon as the market comes here, we would have entered and we would have looked to buy. And our targets would be the next high right over here, just like so, right here. That's where our target would be to complete our trade. Let's see if it will hit the target. Come on, baby, come on, come on, come on. You can do it. You can do it. Here we go. And just about hitting it. All right. We hit our target right there. So ever so slightly, we just hit it. But see, guys, this is how you identify a trend in the market. It's very easy to identify trends in the market. A lot of the times people trade against the trend because they're lost in the trend trading. They're lost in terms of how the market is moving. All right, so only think about this. Identify where your supply and demand levels are, and then inside your supply and demand levels, identify your breaks of structures, your minor swings. Your minor swings are here. Minor swings are going up like this, see? And minor swings are breaking structure. So as long as you identify this, your minor swings are substructure swings. Okay, in this case, the minor swings are going up, so we know that the market is a buy. It's a buy bias. Okay, so if the market never broke up here, look how the market never broke here. Are we going to be buying right now or selling? No, we're going to do neither of those right now because there's no confirmation as to where the market's going to go yet. The only way we're going to know if it's a buy in this case, is only if price breaks the structure. Okay, and it's going to show us more momentum that the market is in fact wanting to go up. If the market breaks below the structure, are we going to automatically be in a sell bias? No, because it doesn't tell us when we're breaking below. It doesn't necessarily tell us the market's still going to continue lower. We need the market to break the first structure right here, and then come down and break the second structure to tell us that the market in fact is bearish. Okay. And that's how we identify trend. Now, let's say if the market reversed like this, broke the structure here, the first structure, we would need to identify where our last where our last demand and supply is. Well, as you can see here, we have a demand area here that price has never touched, hasn't even broken. We have another demand area right here. This is our next area of demand right there. Let's change the color blue. Let's change it to demand right there. Okay, so now we know that if the market should ever reverse, it'll come back down to a demand level, right? We're still in a buyer's market because price is breaking the supply chain, came back and retested, or came back to an order block right here, took off. Now, if prices should ever break this low here, let me zoom in here. Price breaks this low right here. Oops, right there. We're going to wait for the markets to reject this order block, to bounce off this order block, and to break another structure, another low, to tell us that the price is actually indeed a sell-off from here. But once price gets to demand right here, we're going to have to look for buying positions because we're still in a buyer's market, right? Price should switch from substructure to minor structure going back up like this, okay? We would have broken substructure like this. This will be the first printed high, the first high that's printed, the first higher low, the next higher high, next higher low, next higher high. And it just keeps going like that. So make sure you identify your supply and demand and your breaks of structures. That's how you identify the true trend of the market, everybody. I hope this video was educational. If you guys have any comments, please leave it below. Let me know if this was helpful at all. If not, put a thumbs down, whatever you like. I'm looking forward to hearing from everybody. Until then, guys, enjoy your week.